All right, well, welcome to the iWealth podcast, and today we're sitting with Mr. Brad Connors, the owner of iWealth, and we're talking about the S&P 500, and in particular, what's happening with that. We've obviously had this unbelievable run. Your clients are probably thumbs up at any given time. Yeah. Give me the lowdown.
Yeah, it's interesting, Matt. Like, as you know, I've been doing this for over 30 years now, and I'm not an economist. But, we get paid to have an opinion. And so we look at a lot of different charts and graphs and listen to different people. Just yesterday in our office, we had a guy from a mutual fund company on Zoom for a half hour to give us their update on what things are looking like for next year. And it's just important to stay part of that. But what's interesting is I always like to take a step back and just like take the breath of what's going on in the market. And I like to ask younger people what they're doing, what they're seeing, what's happening, because this is a young man's game too. And it wasn't like 30 years ago, you and I didn't trade stocks. We didn't even think about stocks. We didn't talk about politics. Like, this world has changed today. And I think it's really important to just try to keep an eye on what we think is going on down the road. I mean, I know you hang around with some young people too. I think it's good to do that. We used to be the young people. I used to be the young guy. I'll let you be the young guy. You're younger than me. But what are you, when it comes to Bitcoin and stock markets and Reddit groups and all that, like, do you ever have conversations with some of these young people? Like, what are they doing or talking about?
Yeah, I mean, the Bitcoin thing was hot for a while, and then it kind of seemed like it went away. And then there was all these other iterations of Dogecoin, and it just seemed like the people that I knew said, if you've been diligent about saving, that it's a red flag to the government to cause an audit. Right. And because of that, I've always been scared about it, because who wants to deal with the process of an audit because you bought $1,000 worth of Bitcoin? Like, it doesn't really seem like a red flag that I wanted to raise up. Yeah. With that being said, there is a lot more of like the quick little trading, of a lot of my friends that are like, go to the bathroom and make a quick trade instead of checking their Instagram feed or something like that. And just statistically, I guess I know, having been being a Dave Ramsey fan, that if you look at that over 10 years, it typically doesn't work. So just this week there was an article in Wall Street Journal about servicemen and women that are on a Navy carrier that are doing trades, that are in their Robinhood account or Schwab or wherever they're trading and doing trades. Like, it's just super interesting to me. The issue that I have right now that I see, like, I asked the portfolio manager, I'm like, what's the odds of a recession next year? And they had asked all these lead mutual fund managers of this large firm. It was over 100. 97% of them predicted that there's not a recession next year. And then I'm like, well, what's the black swan? Like, what could happen that's out there? Because I'm always trying to figure that out. Like, I'm not a market timer, but I just want to know. I want to be on the know if I feel like something's kind of coming. What's been interesting is to take a look, like this Bitcoin, for instance, and we don't sell Bitcoin or anything. I think there's some ETFs, maybe people can use it. I think the audit thing has slowed down a little bit. I think that's when people are buying Bitcoin like in some weird wallet. But I think if you buy it now, in your brokerage account or something, like, I think some of that's gone away. But basically you're just buying. You're buying call it a piece of real estate that could go up or down, but it's not real estate because there's nothing backing it up. But I'm not here to debate whether you should buy Bitcoin or not. But what's interesting is it's really off. It was up to 130,000. It's down to 90. Like, my question to him is there enough money in Bitcoin or in these type of investments in general? Like, if all of a sudden it went from 90 to 9,000. And it dropped 90%. Like, is that enough shockwave? Is there enough money in these cryptos to send a shockwave? And there's trillions of dollars that are in it, which I didn't understand. I didn't know that there's that much in it. So, I'm kind of paying attention to what's going on with those trades. And, I'm watching Bitcoin just to see what's going on. The NASDAQ seems to be following Bitcoin, when Bitcoin's down and NASDAQ's down, that's small company stocks. So I'm paying attention to that. And then, the Fed probably is going to lower interest rates again in December. That seems to be the consensus, and maybe again next year. But what I'm also paying attention to is the S&P 500.
Yep.
And if you recall, the S&P 500 is 500 large company stocks. And when I say, Matt, if you gave me $1,000 and you put it in the S&P 500, and how is that money dispersed in your mind? Asking you frankly.
500 biggest stocks, and
Yeah.
then allocated for how much they have. So it's not that it's a 1-to-1 of 500. It could be that some big company like, I don't know, Amazon or whatever, or a tech stock has a huge amount of the weighting to it.
Yeah.
That's the way I understand it.
Yeah, that's good because I've educated you well, or maybe you've educated me. But that is right, and that's called the S&P 500 as people know it. Okay,
Yep.
So there's also an equally weighted S&P. That means that it's equally between those 500 stocks at $1,000 you put in. Okay, so what's interesting is never in the period of history in the S&P 500 has it ever been this highly concentrated. 40% of the S&P 500 is in the top 10 stocks. Mm-hmm. So when people put their $1,000 in the S&P 500, 500 companies, diversified, spread out, they're not, because 40% of it's in the top 10.
And it's all tech.
And it's mostly all tech.
Yep.
And that's what's been leading this market. And it's all based upon market cap and sizes and things like that. And so that's interesting to me. What's interesting is all of a sudden if 3 of those names fall out of favor, or 7 of those names fall out of favor, like, how are people going to react when their safe S&P spread out 500 different companies doesn't act the way they think it should act? And so people need to pay attention to that. And I see it a lot in 401ks. People just grab the S&P 500. It's not a bad thing, but maybe they need to rebalance and be in the equally weighted now, so that they have some value stocks and things like that, and it's not all kind of tech. So I'm paying attention to that. That's interesting to me. And then, also paying attention to some of the economists I follow, like, what do they think is going to lead next year? So the 2 I mostly follow believe that we have single-digit returns next year on the S&P. That's after being up the last 3 years. Like, we've had really good runs in this market. And so if single-digit returns are a number, where's the single digits coming from? And they tend to be pointing to small company stocks right now, and then a slight lean towards value. So that tells me that those 10 stocks are not going to be in favor next year based upon the expertise, which tends to tell me you better be rebalancing that S&P 500 that's out there. So I'm looking at that, and then I'm also paying attention to real estate. And I don't know, locally it seems like we're in a pretty good market and things continue to go. But you go downtown Minneapolis, or you go downtown in some of these big metropolitan areas, and you've got skyscrapers sitting there with nobody in it.
Yeah.
Yeah. Have you been downtown?
Well, it's just crazy. You go downtown in Minneapolis, and you're like, it's an astronomical amount of the big tall buildings don't have anything going on in them.
Right.
And you walk around in the skyways and you're like, man, this is a little bit of a ghost town.
Mm-hmm.
It doesn't take long for that to flip and become scary.
Right.
Just with odd characters,
Mm-hmm.
when you lose the good people to the suburbs, which seems like that's what's happening.
Yeah. Yeah. COVID made a big shift, right? Everybody worked from home and things like that. Interesting article I read just this morning that real estate's starting to come back a little bit. Like, they're starting to look at it saying, okay, market's been here the last 3 years. Real estate's been here. Is it time to buy some real estate? Speculate that some of that comes back. So, but the real estate market in general, like how expensive it is to buy a home these days.
Yeah.
I was just listening to a podcast lately in the last couple of weeks, and the younger guy in his 20s talked about, in Charlotte, North Carolina, 20 years ago, you buy your starter house was like $220,000. Now it's like $450,000.
Yes.
Well, it's pretty hard to afford coming out of college a $450,000 house, And some people would say, well, move to West Texas then, or some small town and get out of Charlotte. But the point is it's
It used to be 3% mortgages, and now it's 6.
Yep.
So paying attention to real estate, paying attention to crypto, paying attention to the S&P, kind of sectors rotating and things like that. But I do believe, like, I'm not trying to paint a doom and gloom at all. Like, I do believe that this bull market continues into next year. I think more volatility should be coming. Like, it's okay to have a 10% pullback.
Yep.
And I think people should be looking to put some money to work on those pullbacks if they're sitting on some cash. I think there'll be some opportunities. But you go out longer than 12 to 18 months, and it's anybody's guess. You know?
It seemed like a long time ago people were able to guess further into the future, and the closer we get to the AI thing and all of the different factors where there's so many things at play, there's just no good way to guess.
Yeah.
That's what it seems like to me.
Yeah.
So where maybe they could guess a year or two into the future, now if you can guess a day or two into the future, that would be amazing.
Right.
You know?
Yeah. All of a sudden, ChatGPT is complaining because they need ad revenue now and those type of things. Like, it's just amazing on how those things kind of rotate and move around so fast. It's just interesting. You got a lot of debt that's going on with the U.S. government. You've got money that's going overseas in some different wars. You've got tariff scares. You know, there's just so much uncertainty
so
out
much
there.
variables.
Yeah.
There's so many variables.
Yeah, and it's easy, Matt. It'd be easy to sit down and say, well, I'm not going to invest because tariffs.
Yeah.
Or I'm not going to invest because of what's going on in Ukraine.
Yeah,
or
pick
I'm not
your
gonna,
variable
yeah,
of the day.
exactly. And we've been here before, meaning we've had issues throughout our history, but the market has always won long term.
Yep.
If you can just, you know, turn your head on those harsh moments when they show up and look away a little bit. So anyway, I just thought it'd be good for people to understand kind of what we're thinking about, where our heads are, what they should be thinking about, and at the end of the day, diversification wins. And I think this S&P thing, it will be diversified again. Mm-hmm. And if you're in the S&P, you're going to be part of that diversification, which means it's going to rotate to other ones, and you might not like your returns when that happens. So, yeah.
We'll see you back here next time.
All right. Thanks, Matt.
Yep.